Thursday, March 21, market analysis, Stan Ehrlich. Well, I always start out with the stock market indexes, as I do again today, typically with the E-mini or the spider. The spider is high and last at the moment, very strong, making new highs, going up, and it gapped up this morning. One very, very important feature here is we are almost overbought 73, 74 plus, not quite 75 on my custom RSI, which will turn the price action yellow like in here, setting us up for another bearish engulfing sell signal, which has not happened for a few days. And we have a higher high again. Ladies and gentlemen, I've been at this 53 years. I have very rarely seen a market go, and this was from last October, up this steadily, November, December, January, February, and into March, the middle, past the middle. That is almost a full 5 months of no significant downside, swing, correction, dip, whatever you want to call it. The biggest one we had looks like back here, or maybe here. And these two corrections just are minimal. They lasted a few days. They didn't go down that much. They didn't make new lows for any large number of previous days. They didn't break any major trend lines. There's no indication that the market's turning down for 5 months plus. We're cruising for bruising. This is too strong, too long, too much. We are almost overbought again on the spider, but we got overbought in the E-mini an hour ago. So we'll see that in just a minute. With the gap up, this could be, before it happens, maybe an upside exhaustion gap on the spider. Next chart's the spider, 1 minute. Huge gap up in the opening, couple points, pretty good. And it's going a lot of nowhere since then. But the important thing is it almost got overbought on the daily chart. And if we start going down, and doesn't look likely, get below yesterday's low, and that'd be down at, I don't know, 511, and we're at 23, that would be a 12-point break from here. Again, not particularly likely, but you never know. In the market, you always have to be prepared. You always have to know what to expect and be prepared for that expectation. If the expectation, which is an expectation, doesn't happen, you don't have a signal, you don't have a trade. You keep going until you find your signals, until you find your expectations coming true. But your expectations should be built into code. They should be built into a mathematical version of your expectations, which are psychological. That's you. You are your worst enemy. You are the short stick in the group. It is your human being, everybody, psychology, emotions, greed, fear, all of these things that people normally have that gets in the way of profitably trading on a consistent basis over time. If you use discretionary trading, your discretion changes over time. If you use algorithmic mathematical formulas, they're a constant. Now, yeah, you could go in and change it when you want, one now and then, and that does happen when you have algorithms and stuff, but at least it removes you from the decision-making process. That's what you're after, eventually. Okay, enough of that. E-mini, we did get to 75 or higher on my custom RSI, period. That turns the RSI yellow for today's bar. Remember, I plot high, low, and current tick, like Wells Wilder only plotted the previous day's closing, and today's current until the close. Then it becomes constant, static, and then you go on to the next day. So about an hour and a half ago, at the high of the day for the rally on the spider, we did get overbought. So yellow RSI, yellow price-wise, price chart. We are set up for an outside down day or bearish engulfing and get a red bearish sell signal. The last time we had one was back here, it didn't work. And that was way back in December because this market has been so steadily going up. We have another setup. I really doubt it's going to happen. But again, on your toes, I would consider, I'm trying to use words that are not definitive because the government doesn't like that. I can't say I would absolutely or I have to or something like that. I would consider putting a new short sell stop somewhere just below yesterday's low for a day order only today. And if it gets hit, you're going to have your bearish engulfing red ER sell signal that I love. Next chart is simply our ER 5-minute chart. And so it was actually about 20 minutes ago plus that we got oversold when we were actually at the 935 bar, that bar right there. But don't look at the RSI down here. That is a 5-minute RSI and has nothing to do with the daily. So I kind of squished it so you couldn't see it. Now, Qs, pretty much the same thing. Not quite strong enough for the daily RSI to turn yellow. And that's what we need to get a ER sell signal. First, overbought. And we're not quite there yet. 1-minute chart, gapped up. I do like these gaps. Remember, they're almost always closed. So I'm at least at a minimum expecting a modest drop to the high of yesterday. But if it gets much more violent, frankly, than that, and gets below yesterday's low, it's a bit of a different story. Not likely. Next. NASDAQ futures. Not overbought. The only one so far today that hit 75 plus on my custom RSI scale is the E-mini, ES, daily data. And of course, the 1 minute. Now, NASDAQ 1 minute. Strong, going up overnight. This morning, pretty much a little bit sideways, but there's no arguing that this market has been, you can't say it will be because that's a prediction, you don't know, has been extremely strong and is very close to overbought conditions across the board, but not quite there. Next chart is the Russell 2000, close to a previous high, might turn itself into a double top, close to overbought, not quite there. Last time we got close to overbought, it did top out with a bearish engulfing, which would have been ER signal red, but it's red here on a regular candlestick chart simply because the closing price is lower than the opening. Has nothing to do with the fact that it's a bearish candlestick or that it's a ER sell signal of any kind whatsoever. That's simply a Japanese candlestick red because the close is lower than the opening. Next chart, Russell. Very strong, up there, but still not quite overbought. We're getting super close. The only one, E-mini so far this morning. Next, bonds. The daily December bonds, let's zoom in a little bit here. It has a doji. Today's high is almost the same, a little bit below yesterday's high, currently around unchanged. And I think the bond market is going to be relatively stable for a short while or a little soft. I wouldn't be surprised to see it break the support level, but not really go down too much if it does. I'm basically looking for a major buy signal. Now, yesterday was a bullish engulfing, but you'll see that the RSI did not get to 25 or lower within the last several days. So no signal. Yeah, it kind of went up a little bit this morning. It matched yesterday's rally high, but not very impressive, that's for sure. Neutral, comment, waiting for buy signals, looking for this market to start an uptrend, not expecting any major downside move short term. Notes, same comment, except the notes did double bottom out. They came extremely close to the same price low it had in February 23. in the support area, at support area, and smack at the bottom of the support area as well. Today is, 3 days after that happened, a new high. At the moment, it's kind of slipping down 6 ticks and not looking very strong. The 2 previous days, they were up days, close above the open, higher, higher. Today, maybe it'll slip a little, but I'm neutral to maybe friendly, a little more friendly in notes than I am on bonds because of the exacting turnaround and stuff. The 1 minute on the notes. As you can see, support area basically held, and up you go. Next, we have an outside down day, bearish engulfing yesterday, and overbought in the crude oil. Now, I forgot to turn my study on real quick. I'll do that for you, and I'm going to go to my ER folder in NinjaTrader, click on ER1 just to turn the colors correct, and apply and say OK. And now we're going to wait about 10 seconds, and all of these red and green colors are going to change. You're going to see a few red and green, mostly white, some yellow. Right about now. Did I forget to turn this on? I can't believe I'm so damn stupid. I did. Enable, apply. Now another 10, 12 seconds. Sorry about that. I got to get used to this. Remember, I was using TradeStation for 30 years and still do. But Ninja, there's some really nice features. So I am slipping in the direction of Ninja. And right about now, it should change colors. Come on. There's the word calculating in the upper left. So I know it's about to. And there it is. Yesterday, ladies and gentlemen, was my ER sell signal because of 2 major factors. The first and most important, it was overbought on my custom RSI. 3 days. Yesterday was the third. It was also a bearish engulfing candlestick. Everybody knows about those. I love them a lot. It's one of my favorite one-day turning signals, but I don't use it by itself. I need to correlate it with something else in order to get a better quality signal. And that's exactly what I do. It is a slight variation on Steve Nissen's, or the Japanese people, candlestick. My closing only needs to be below the previous day's closing, not below the previous day's low. So it's working. We're currently down on the day 0.50, 80.77. Well, right at yesterday's low. We have been below yesterday's low. The high of the day might have, in fact, oh gosh, I got to do this for you real quick. We might have grabbed an ER3 short sale because it looks like it's the middle of the range, or it's a mathematical number, not exactly the middle, for an ER3 trigger. And here we go. I'll turn on the ER3 overnight version and enable. Okay, now there's a little line somewhere right around the high of today that's going to pop up on the screen from yesterday's range. And I want today's high to be exactly the same price. That means I hit the high of the day. A couple more seconds. Oh my God, I got it. I got it. And let me turn this off real quick. Oh gosh. Okay, there, sorry. Now, the high today is a little bit above the mathematical formula. We shorted very, very close to today's high in the May crude oil. There it is. There's the entry. It turned out to be 81.72. It's because of yesterday's price action and calculations. We now have a market that's trading at 80.76. We already have a day trade scalp profit. We got out at 81.08, give or take a little, and got short at 81.72. Come and gone, day trade profit, ER3 scalp, end of story. ER3 overnight, probably, I didn't load it and show it to you, probably is still loaded and running and profitable because we get short ER3 scalp and ER3 overnight at the exact same second and the exact same price. Explanation point. Love it. Let's see how this trade goes. Obviously, I'm turning bearish because of the bearish signal yesterday, and I'm looking for the crude oil to come down to a minimum of the bottom of the support area, or resistance area 79.01. 1.5 lower from where we are right now, not that much. Oh, there's a small gap to close right there too. Isn't that nice? Perfect. Now, if it keeps on going, and I think it probably will, what next? Well, looks like probably 76.5. I'll put a support and resistance in there right now because I should. Yeah, that looks about right. Maybe even a little lower, so let's not screw around with this much. That would be my next downside objective. 76, yeah, and a small fraction. And even lower. Keep your eye on crude. Looking for a break. Starting one. Good start today so far. My protective stop initially is above yesterday's high, but I'm sure since we made lower lows today that it has already started to come down some. Next, heating oil. No signals, dropping off some. Came up to resistance, close to it, didn't touch it. Would have been better. Between a rock and a hard spot. Next, natural gas, NG. Near support. I don't think it's going to hold. And I don't have a line there. I'll just draw a line in real quick. Yeah, I can draw it across the previous low. There it is. So I think that line's going to be broken. That's the previous low, that's support. And it's also a little bit higher around today's lows. We're not close to being oversold, so I think there's plenty of elbow room for it to come down some more. Next, this is ice, so I don't have it. Next, gold. Wow. Big range today. Got overbought again today. And wait until you see silver. It's wow. Gold is also a half a wow. Currently lower on the day, higher by 22 on the day. That does not look right. Why do we have a current quote at this price and the candlestick says it closed at the high of the body? That should be 22 lower, it looks like, not higher. Anyway, big spike up is the point and way into new high ground, and we're not hanging in there. We're not holding. Yeah, that's the correct data. So I'm looking for a potential reversal. If I get below yesterday's lows, it'll be a huge higher high, not one, but 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days past. And if we get below yesterday's lows, it is incredibly close to the low of the previous 2 days. So they won't hold. That'll probably just slam right through those two, and you'll be seeing a new low for a week and a half, 2 weeks, all in one fell swoop. I don't know that that's going to happen. I'm just saying if silver has done it. We are currently trading right now below yesterday's low and the day before. Today's high is above all of the previous few months. This is a gigantic outside down day, and it got overbought today, and it was overbought a few days ago also, which means you got a double, overbought condition as far as I see it. We are now short silver. We're short ER1 overnight and scalp. And actually, I think the scalp already was offset right down here near our current quote. We are looking for a lot more weakness. This market didn't quite get to the resistance area. I thought I was going to hit the green zone, similar to what it did way back here. The comparisons are very close. I would love to see the silver market do exactly what it did starting on December 4th, down 1, 2, 3, 4, 5, 6, 7 days in a row. but that's a stretch. I mean, that would be outrageously fantastic. But it can, it did, and it might, maybe, not likely, happen again. We're on our way, I think. Don't trust what I say. I don't know anything. This looks great. Next, a bounce we've got in platinum in support the last couple of days. No surprise for bouncing out of it. We didn't get oversold, so yeah, that's not the contributing factor. It's just support. And a lot of nothing is happening. Look at this. You're not going anywhere. No trend for, pardon me, the last couple of months. Next, copper. No signals. Definitely overbought. Yes, it turned down for a couple of days, but we bounced off yesterday's low, almost exactly support. And of course, these are my interpretations of support and resistance areas, not anybody else. This is where I see it, period. And if you ask questions, you can contact me at info@ersignals.com. Why do I draw my lines where I do? Why do I say what I say, et cetera, et cetera? We were overbought within a few days ago. That's important. We do have a almost bearish engulfing developing right now in copper. You had the higher high. You've got a low today, not too far above yesterday's low. The current quote is on a little bit of a bounce, but if before the close we get down below yesterday's low, we will have a bearish engulfing and my RSI overbought condition within the last few days, and finally a bearish engulfing ER sell signal. But it hasn't happened yet. Don't jump the gun. If it hasn't happened, it hasn't happened. My automatic trading system, ER signals, will automatically go short if it gets lower than yesterday's low and manage to stop and move it and want to get short for the next few days with the R3. Next chart. Soybeans. Rally high today for a couple of months maybe. Looking fairly strong. No surprise. I talked to you about being oversold for about a week or so back here at the bottom. Unfortunately, we didn't get any particular signal, but I like what I see. I can expect a little bit more strength maybe anytime, since I don't trust this bear market and we're overbought. I might get a bearish engulfing ER sell signal, in which case I would be anxious to go short. If it was discretionary, my system will go short automatically. Next, oil, crude, soybean oil. We do have the higher high today than yesterday. We were overbought a few days ago. We could have a bearish engulfing if we get below yesterday's low, and my system will go short automatically. Notice how close I am to a variety of new short sales. I was telling you in the last few days that this could develop. It's not quite there yet, but I'm hoping it develops by today's close, maybe tomorrow, some definitive black and white rules applying signal. Next, meal. Not overbought, so I can't get an ER sell signal, but we do have a higher high for several days. It's having a little trouble right around the top of resistance. Looks a little tired. Maybe it's going to start to come down again with the rest of the grains. Probably. Next, corn. The high today is almost exactly the same as a week and a half ago. Resistance. A little bit above that is another resistance area. Let's put a couple of lines in here. Right across here will be just good, just fine for me. And I think I want to copy that and put it down here. Another little line right across the high of the last couple of days, and that would be right there. Good. So a couple of minor resistance areas. Don't trust rallies. I've said that. Like the short side of the greens in general. No, I can't say anything else. I think it's going to turn down any old day now. Inside trading day on wheat, no higher, no lower than yesterday. That's a doji. Currently trading exactly unchanged. Bear trend, obviously. Resistance area, I should have already done this for you guys, sorry. Pulling this support and resistance area over a lot more. TradeStation cannot really do this very adequately, but Ninja is great at this. So I'll pull my resistance and support over, way over to May 3rd. That's great. Well, a month and a half from now. It'll stay there. Don't have to do it every day or something. I think this is about ready to turn down. This is the corn, or wheat rather, sorry. 1 minute. Next, cattle. We have the cattle slightly higher, but if we were to slip just a couple of ticks or more, we will be having an outside down day. Right now, that's a bullish engulfing. In an uptrend, a bullish engulfing really doesn't mean too much. It just means you're going to continue to work higher, supposedly. I don't put a lot of weight on the bullish or bearish candlesticks if they don't correlate with other things like support resistance, overbought or oversold, trend line, formation timings, a variety of other things as well. But we might just have a reversal if it slips a little. Otherwise, steady to higher, not too important to me. We weren't overbought recently, so I can't blabbity blab about that. That's too bad. And we're back into a chart, the hogs. Now, I said on this day that the hog market had exactly the same number of days from this day, January 30th, that rally high, and all it was at the time was a rally high around resistance, and it broke down for a week, pretty good. Then it started to rally, went right up into new high ground completely, and it took that number of days. So that is not important at the moment either. But it went back down, could have gone down lower, could have gone down to something around here, and then my neckline, and that's exactly what I'm talking about, is a head and shoulder. That would have been fine, but that didn't happen. It came down to here and went up. And all of a sudden, I'm realizing on this day, March 15th, you were exactly the same number of days after the top as this rally high was before the top. And that's perfect symmetry. That day, that rally was a warning. If it went down after that, and it certainly has, shoulder high, before the pattern even goes down to the neckline, which we have touched today. If we close below this yellow line, we have a downside breakout on a head and shoulder top that has perfect symmetry, textbook pattern. If you know what to look for, you can look for it while it's happening, and even a little before it starts to happen. Gives you obviously an edge, to say the least, an important one. So the minimum downside objective, if this pattern, which is not broken out yet, it has not started to work yet, it is only almost finished forming, but we need to close below the neckline to start it working, supposedly. They don't always work. They don't always fulfill their objectives. Don't get into the habit of expecting it to do what it's supposed to do, because even your kids don't do what they're supposed to do. So 76.65 is my downside objective, give or take a little tiny bit, half a point maybe. This looks really interesting. And I think that's my last one. Yeah, we have the ICE data problem we're trying to fix. There's another head and shoulder top that's developing in the cotton market. And I know you guys can't see this real quick, but I'll go over to cotton. And because the pattern is so similar, I will show this to you, even though it's TradeStation. Ta-da! From the first shoulder, which was a bearish engulfing sell signal for me, 1, 2, 3, 4, 5, 6, 7 days. Exactly the same number, 1, 2, 3, 4, 5, 6, 7 days later. This is also exactly symmetrical. Like hogs. It just doesn't happen. Unreal. Hogs are right here, right now, at the neckline. This is cotton, and this is a week ago. It already broke out below, came back up to the neckline. Now, that is a little bit unexpected. You're not supposed to go above the neckline, but it closed below, saving itself. Went down the next day, and that was Tuesday. Wednesday, new lows. Today, almost a new low, and it's going no place fast. So the charts on cotton are actually kind of predicting what the chart will look like in a week in hogs. Isn't that weird? That is so weird. Okay, pull this away. It's not ninja. There's the hogs again. Watch what happens. Have a great day. Thank you very much.